Why manage money for other people? A question that comes every now and then in the fund management business. The purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. So, one of the crucial questions is, well, why am I accepting other people's money? Why am I advising other people? What is in for me? Why would I do that? This is a Not Even Wrong podcast. It's January 12th, 2020. This is Krim Delko for the day. Since the last update, the fund is up 4%. We are up for the year 23.5%. The market is up roughly 1% for the year. The question, why do we run money? Why are we actually accepting customers? This is an unbelievably important question for various reasons. First of all, it gives you sharpness. It gives you an idea for why you're doing what you're doing. It also differentiates you from a marketing perspective. So should you choose to have customers, it is unbelievably important to understand why you're having them, what you're trying to achieve from them, and what you're promising to them. So those are very different questions. And let's start with that. So first of all, this question, why do I have customers, can be looked at from two angles. One is what do customers bring to me, and the other is what can I bring to customers. And I think both questions need to have very clear answers. Otherwise, your business is just not going to work out fine. So here are my thoughts. This is not very scientific or anything like that. This is literally the gist of numerous meetings that we had. Actually, one we had today. We discussed on several occasions why we're doing what we're doing, why we're having customers, and why we think that it's also a good idea to continue that way. So first of all, we do have customers. Orange Capital Partners is a hedge fund that is also accepting money from outside. So we do have, it is fairly selective how we do that. We have very few customers, but we do have customers, and this podcast is by no means, the purpose of the podcast is not to solicit money or anything. If you listen to this and you have thoughts about investing with us, please contact us through different channels. This podcast is not meant to solicit any kind of capital from investors. Let's just be clear about that. But now let's go on. So let's keep it general, and then I'm gonna be more specific about us. Why would any hedge fund, for whatever reason, accept money from the outside? Well, the obvious reason, of course, is financial economics. So a hedge fund, ours, is charging 20% carry on the profit. So you actually make money if you manage other people's money. And that is, of course, an important reason. It helps you cover your costs. It helps you generate your own wealth, which I think is a very important thing. Like we said, the measure of wealth is freedom. So the more wealth you have, the more free you are. And therefore, managing other people's money clearly fits in that category. But I think at some point, it becomes less of an important factor, in particular when the assets grow and there is a lot of net asset value to be managed. At some point, let's say, just to give you an example, if you manage $1 billion and you make 20% on your own money, so let's say you have $1 billion and you make 20%, you earn $200 million. And then if you manage, let's say, another $5 billion from outside money, you make $1 billion for those people, which is 20%, you will make another $200 million in fees. Now that's obviously great, but in a sense, not necessary. Financially, I think necessity comes with money, of course, but at some point it also ceases to be that important. For us, we're still in a sort of middle way. We do appreciate money, we do appreciate income, but we're not solely dependent on it. Let's leave it at that. So there are other reasons for why we personally are keen on managing money, and I think that this is where this conversation is going in our fund. The question is, what do the customers bring to us? And they bring us a couple of things. They bring us accountability, responsibility. They sharpen us. They give us street cred. That means that when we expose ourselves to, let's say, investable companies, when we talk to other companies, I think having third-party money just makes you a little bit more accountable for what you do. You have responsibility. You have other people's money at stake. There is more skin in the game than even if it's just your own money. I would say these are all important things: sharpening, being clear. I want to give a little anecdote. There is a company in Switzerland. I don't need to name names, but there is a company in Switzerland. It's a privately held company. Most of the shares are owned by a family, but the company is still public. And I once asked the CEO and owner, why are you public? And he said that for exactly those reasons: transparency, sharpening, more accountability. My employees are more in line with the mission. It just helps formulate and crystallize why we're doing what we're doing. And I think I believe very strongly that this is also why we are doing this. We're not public, obviously, but in a sense, we are exposing ourselves, our strategy, our ideas to the public, and it just forces us to be more orthodox, let's say, in pursuing our mission. Our mission is to generate wealth by investing in fundamentally new concepts and engineering practices with large impact. So we have to abide to that mission. We cannot deviate from that mission if we have customers that trust us with their money based on that mission. And we also are forced, forced is maybe the wrong word, but we're incentivized to be a lot more scrutinizing when we invest in companies, because they also have to align with our mission. So there is a more direct line between what we do and what the companies do, and how the wealth is generated in the companies and then transferred to us through our investments if we have customers. This might sound a little bit unusual maybe from the outside. Why would it matter if I have a customer or not? I know what I'm doing. I have the choice of what I'm doing. And of course, I'm a proponent of free will and all that. So it is really me, and it's my accountability, my responsibility, and my freedom and my accountability that eventually puts me either in the bucket of success or failure. But I think that having the right investors, and this is another very important topic, the question is not just should I have investors, the question is also what kind of investors should I have? And the answer to that question is, I am absolutely certain that it is crucial for any hedge fund to make sure that their investors are aligned with the mission, that they have a clear understanding of what the fund is aiming to do, what the mission is of the fund, how this mission is going to be executed. So to come back to one of the previous episodes, there are assets, there are resources, and there is knowledge and creativity. The assets are things like what you actually own. I mean, do I have a subscription to Bloomberg, or do I have this, do I have that? We are a very asset-light company. We don't actually spend a lot of money on any of that stuff. The resources are a lot more important. Resources are your network, your knowledge of the industry, the MIT OpenCourseWare, which is a phenomenal educational tool to understand things like CRISPR, computational biology, SynBio, quantum computing, artificial intelligence. So those are the resources that are available to us, and with more wealth we have more resources. And then the knowledge and the creativity are really the sort of intangibles, and also not the predictable part of any kind of business. What is the knowledge that we can actually create, the explanatory knowledge, to use David Deutsch's words? What is the explanatory knowledge that we can generate given our assets and resources to better invest money in wealth generating assets? This is in a nutshell who we are, and all these three factors, so the assets, the resources, and the creativity, have to align with the mission. And the mission then translates into our actions, which is, will we choose this company versus that company? For example, recently we spoke about investing in Adidas. Adidas is a very good investment. There's a lot of good ideas there, but it doesn't really fit into our mission, so we wouldn't invest there. So our investors have the comfort of knowing that we will follow our mission, and you as an investor have the comfort of just making that decision. Do I align with that mission or not? I don't have to go and scrutinize every single action, every detail that we do, because overall the big picture mission is always going to be honored. So I think to summarize, why do we have investors? The most important reason is to keep us accountable, to keep us to keep us to keep our feet on the ground, to make sure that we are prudent with our risk management, to make sure that we have that third party responsibility. I think that just is different. It's a little bit like having kids. Unless you have kids, you just don't know what it means to have responsibility for another human being. You can read about it as much as you want. Until you have kids or maybe some other dependent, you don't know what that is. And I think having customers is similar in terms of what it actually means to have responsibility. I want to highlight a few other things I think that are important in terms of why we're doing what we're doing. I think there is a moral obligation for me to try to generate as much wealth as I can with the resources and the knowledge and the assets that I've been given. And this might sound a little bit weird, but I've spoken about this with friends, I've spoken about this with professionals. There is a moral obligation to make as much money as possible. Making money is a moral obligation. If you have the opportunity, if the world offers you the opportunity to generate wealth, I think you have to take it. You don't have the luxury to say no. You then have the obligation to do with that money something that is aligned with your mission and sort of corresponds to what you believe is a good thing. Good is a subjective thing. In my view, there is an objective path towards goodness. I strongly believe in David Deutsch's words there. He says that everything is objective in a sense that you have art, aesthetics. I think goodness can be objective because there is the paper trash effect that you have to think about what is actually good. So there is a way to develop and get better at actually doing good things. So I do believe there is an objective path towards goodness. I don't think I'm there. Nobody's always ever there fully, but I think we have the obligation to, if the circumstances are there, if we have the opportunity to generate wealth, we should do it. We shouldn't say no. We have to do it the right way. Like I said before, for example, it is not prudent to just accumulate as many investors as possible because that is not going to maximize your wealth. What is going to maximize your wealth is to get the right investors. The right investors will help you maximize your wealth. And if that wealth is not the maximum in the world, meaning if you're not the richest person in the world, it's completely irrelevant. You have fulfilled your obligation within the system of capitalism that we live in, generating wealth through private choice, through individual free choice, is the way to do it, and it is, in my view, a moral obligation. So I think we don't have the right to say no. It is unethical to turn down opportunities of wealth generation, as long as, again, they have to be within the context of a mission that is being pursued. You have to try to achieve good things with your wealth. I think also, and this is very something we strongly believe in, that even the way you generate wealth has to be in a good way. Our fundamentally new concepts and engineering practices that we pursue have large impact, and that impact is a good thing. For example, it helps reduce carbon, decarbonize energy. It helps increase the speed of drug development through CRISPR and things like that. So I think we try to do good things with the wealth generating assets that we are pursuing. But that's not necessarily what I'm talking about here. So I'm talking about the moral obligation to seize the opportunity to make money when it's there. This is different than making money the right way. This is different. This is a whole different conversation. We have this on our website. We talk about this, sort of the evolution of capitalism from caveman to Tesla. What we mean with that is it used to be investing has always been sort of, well, you have savings and you put them aside and invest resources into future projects. And the caveman, their savings were, let's say, protein, meat, and they saved it for hunting trips. And then we evolved to something like Warren Buffett, which was, look, I want to monopolize an industry, generate money, and then give the money away in charity. And then what we said in what we're saying on the website is that it doesn't have to be like that. We can actually do good things and make money at the same time. And this is sort of this new generation of entrepreneurs. And I think Elon Musk is one of the proponents of that breed of entrepreneurs. So to summarize, why are we actually running money for other people or advising other people? It is because we have the opportunity to generate wealth. We have the opportunity to make something good for them and for us. So it's an opportunity. We have to, again, I think it's an moral obligation. If I have the opportunity to do it, I should do it. And it's also, from an operational perspective, very, very helpful for us because it gives us sharpness, accountability, and responsibility. I compared it a little bit to having a child and knowing what it means to have a dependent versus just thinking about it theoretically. There's a difference. The same with customers. Third-party customers are key to more accountability and more sharpness. Thank you.